Okay, so you've probably heard the buzz. One of the biggest, and I mean biggest, names in Indian Edtech, PhysicsWallah, is about to go public with a massive IPO. There is so much hype, but there are also a lot of questions. Is this a smart investment, or is it a super risky bet? All right, let's dive in and really break this down.
You know, this isn't just about balance sheets and stock prices. At the heart of it all is this incredible story. It's about a single teacher, Alok Pandey, who managed to build a billion-dollar empire right from his classroom.
And that, of course, brings us to the big question for today. His company is opening its doors to public investors, which means you. So should you get in on this? We're going to look at both sides of the argument to help you figure out what's really at stake here.
To really understand PhysicsWallah, you have to start with the man himself, because this isn't just a company. For a lot of people, it feels more like a movement, and it was all built by one guy.
It's kind of hard to believe, but this whole journey started with Alok Pandey as a tutor earning just 5,000 rupees a month. I mean, talk about humble beginnings for what would become this absolute giant.
And from that 5,000 rupees salary, he built a company that is now valued at a staggering 31,500 crore rupees. That jump, well, it's just mind-boggling, and it's exactly the kind of story that gets investors really, really excited.
So let's look past the inspiring backstory for a minute. What exactly is PhysicsWallah as a business? What's the engine that's driving that massive valuation? Let's take a look.
Okay, so at its core, PhysicsWallah, or PW as most people call it, is an edtech platform. They basically offer super affordable and easy-to-access courses for some of India's most competitive exams. You know, things like JEE for engineering, NEET for medical school, even UPSC for civil services. And they do it all through a mix of online classes, physical centers, and tech-driven coaching.
And their reach is just immense. If you add up all of their YouTube channels, they have a combined subscriber base of almost 10 crore. I mean, think about that. That means pretty much any student in their target audience has probably stumbled upon one of their videos.
But here's the kicker, the really crucial part. They're not just getting eyeballs, they're getting customers. From that massive audience, PW has nearly 45 lakh paid students. That right there shows they have a powerful formula for turning free content into a real money-making business.
So, if you're actually thinking about investing, here are the nuts and bolts you need to know. The IPO size is almost 3,500 crores. It's open from November 11th to the 13th. The price band is set between 183 and 193 rupees a share, which means your minimum investment would be right around 15,000 rupees.
All right, let's get into the bull case. Why is everyone so hyped about this IPO? Honestly, it boils down to one word: growth.
Just take a look at these numbers. Back in fiscal year 22, the company's revenue was 339 crores. Fast forward to fiscal year 24, and that number has shot up to 772 crores. That's more than double. This isn't just steady growth. This is absolutely explosive.
And to put a really fine point on it, that works out to a compound annual growth rate, or CAGR, of 98%. For basically any company out there, that is a stellar, top-tier number and a huge reason for all this hype. And it's not just about making more money. The business itself is actually getting leaner and more efficient. Their operating profit margins have improved by 15%. That suggests that as they get bigger, they're also getting smarter with their money. Sounds like a perfect picture, right? Well, maybe not. So now we have to flip the coin and look at the other side of the story. Because for every exciting growth number, there's always a risk, always a reality check that any smart investor needs to think about.
And this brings us to what might be the most fundamental question you can ask about any company. With all this crazy expansion and skyrocketing revenue, is PhysicsWallah actually profitable?
And the answer, for now at least, is no. In fiscal year 2024, the company actually posted a loss of 243 crore rupees. This number is a huge contrast to that amazing growth story we just saw, and it's pretty much the main argument for anyone skeptical about this IPO.
So you're probably asking, why the huge loss? Well, it really comes down to their pedal-to-the-metal growth strategy. They are spending a ton of money opening new offline centers. I'm talking going from just 28 to over 300, plus all the marketing and hiring needed to fuel that fire. So let's just quickly recap the key risks here. First, and most obviously, the company isn't profitable yet. Second, a big chunk of their offline business, about a third of it, comes from just 3 cities. Any problems there could really hurt them. And finally, there's the valuation itself.
This slide is brilliant because it makes premium valuation super simple to understand. For every single rupee of revenue that PhysicsWallah actually makes, investors in this IPO are going to be paying 11 rupees. This tells you that the market isn't just paying for the company today. It's making a huge bet that it's going to become an absolute giant in the future.
So, we've looked at the incredible growth, we've looked at the serious risks. What's the final verdict? Well, it really boils down to a classic investment dilemma.
Here it is, laid out side by side. On one hand, you've got the hype, this amazing founder story, the massive scale, that explosive revenue growth. But on the other hand, you have the risks, those big losses, a really high valuation that needs future success to justify it, and that geographic concentration.
You know, at the end of the day, the numbers and the story can only tell you so much. As our source material wisely puts it, whether you should apply for this IPO or not, well, that's a decision only you can make.
And that's really the final question I'll leave you with. Are you the kind of investor who bets on an inspiring growth story and trusts that the profits will eventually come? Or are you someone who prefers to wait on the sidelines for the cold, hard proof of profitable numbers? It's the ultimate showdown between hype and reality.